This is today's bent, my dark horse bet, or why I believe Treasury Secretary Scott Bessent will issue BIT bonds this year. Sup, freaks? Are you having fun yet? Instead of the Fed stepping in to bail out whoever was blowing up late Tuesday night, Donald Trump came out yesterday announcing that there will be a 90-day grace period on tariffs for the countries who didn't retaliate after the Liberation Day announcement from the Rose Garden on April 2nd. There will be a 10% tariff levied across the board during this 90-day period, an example of Trump getting to where the market ultimately thought he'd get to. China, on the other hand, has had their tariffs raised to 140% and seems to have been isolated from the rest of the world as the United States attempts to recalibrate the global economic order. I must admit, this is entertaining. Only because, to anyone paying attention, this was all very predictable. Here's what we wrote on April 2nd after the Liberation Day announcement. Do I firmly believe that tariffs are going to be a massive success? I wouldn't go that far. However, I do think it is time to take bold action to reorient the American economy in a way that benefits the common man instead of those closest to the money printer. Everyone clutching their pearls because of a stock market correction is doing nothing more than outing themselves as a completely disconnected pansy who has no ability to stomach even the slightest disruption of their portfolio high watermark. The most nauseating thing about the conversation around tariffs, particularly from the usual suspects listed above, is the fact that they refuse to recognize two things. We all know that Trump is bombastic and intentionally unpredictable so that he inevitably gets the best deal for himself and by proxy the American people. And he's doing this to create a level playing field with countries who have been putting tariffs on American goods for decades. I'll reiterate, it is truly mind-boggling that people haven't caught on to Trump's negotiation tactics yet. If you haven't internalized these tactics yet, take some time to reflect on the last 7 days while reading the second paragraph in the screenshot above. This is the nature of negotiations that include Donald J. Trump. With all that being said, we're not out of the woods yet. Everything we wrote about yesterday still holds true. Markets are screaming and risk is back on the menu. This is great for those holding assets. However, it also means that multi-trillion-dollar deficits driven by unbridled fiscal spending is likely to move full bore ahead. The long end of the yield curve has come down from the levels it reached on Tuesday night, but they are still in a range that makes rolling over trillions of dollars of debt very uncomfortable. And it would be naive to think that the chaotic and bombastic nature of these trade agreements hasn't put a bad taste in the mouths of many outside nations holding our long-term debt. Also, the nature of the chaotic and bombastic approach to negotiations is such that a true social post could be sent out at any moment that completely reverses everything back to where it was yesterday morning. With that in mind, I'd like to point to a potential strategic move from the administration that would not shock me. BIT bonds. If you've been paying attention to Scott Bessent's press and event appearances over the last 7 days, he's been bringing up Bitcoin unprovoked. Last week, when he appeared on Tucker Carlson's show, he mentioned that Bitcoin is becoming a store of value, and earlier today, he brought up the Treasury's intent to make sure that regulations are supportive toward the digital asset industry. I have to imagine that Secretary Bessent understands that today is potentially a temporary respite from the whipsaw markets have been through since Trump took office less than 3 months ago. He also understands that it would not be advantageous to roll over trillions of dollars of debt on the long end with yields where they are. And it truly seems like the Trump administration is willing to take bold action in an attempt to reset the global economic playing field in a way that benefits the United States. With that in mind, the only thing I can think of that can accomplish the goal of bringing long-term interest expenses down while putting forth a bold economic strategy is to begin issuing BIT bonds. He'd be able to roll over a portion of the debt at 1% and signal to the rest of the world that the United States is taking bold action to adopt cutting-edge 21st century monetary technology. It would also obviously support the price of Bitcoin, which seems to be a core KPI that Trump is paying attention to. As a reminder, BIT bonds are framed by Andrew Hohns and Matthew Pines in their Bitcoin Policy Institute paper as a win-win-win. The Treasury gets to roll over debt at lower rates, finds a budget-neutral way to build a strategic Bitcoin reserve, and provides the American public with a downside risk-protected exposure to the best savings technology man has ever seen. Don't be surprised if you see the first BIT bonds come to market later this year.